Welcome back, everyone. Today on Mark Talks Finance, Spotify stock surges to highest level in more than 3 months after revenue monthly active user beats. Strong user growth resumed in the third quarter, with the audio streaming service reporting overall active users and paying subscribers both up 19%. Spotify's advertising business is booming thanks to podcasts. We'll go into depth on that last point in a little bit. As you can see, there's a lot of optimism around Spotify this quarter after they missed out on their monthly active user target last quarter, and there was a lot of concern about the growth of the company going forward, especially due to the effects of the pandemic. Now, with these numbers, we'll take a look at what it means for the business going forward and whether this is a company to put on your radar as an investment. Now, if you look into tech and streaming, Spotify is a very active player in this space, especially when it comes to audio streaming. Now, being a streaming company, the best way to grow your revenue and grow your business is to increase your monthly user subscription count. And Spotify has met their target for Q3 based on the reports. Monthly active users rose 19% to 381 million. Now, this beats their expectations of 380.2 million that was forecasted. To accompany that, the total revenue went up by 27% to 2.5 billion euros, which beat the 2.45 billion euros that was expected. If you look at net profit, more good news there. They reported 2 million euros. Now, earnings per share were at negative 41 cents, which is lower than the negative 21 cents that was anticipated. Now, even with this slight miss on earnings per share, this does not deter investors from pouring their money into the stock, as the stock went up by almost 10% in one day. 10%. That's incredible. But now let's take a look at the real hero of the story and the reason for Spotify's great news in Q3, and that is the rise of ad revenue and their growing podcast library. The headline reads, Spotify ad business boosted by podcasts. Average revenue per user for Spotify subscription business climbed in the latest quarter after years of decline. Now, in your press release, Spotify acknowledged that their ad revenue meaningfully outperformed. Now, Spotify's ad business is built on displaying ads to non-paying users, as well as having a Spotify ad program that allows content creators to embed ads in your podcast. This is quite similar to what YouTube does with Google AdSense in YouTube videos. Now, when you combine this with your exclusive deals on the Joe Rogan Experience podcast, the Armchair Expert Dax Shepard, and the Call Her Daddy podcast, and the Ringer, among other things, and you can see that Spotify is positioning themselves very well for future growth. So what does that all mean for Spotify? Well, I think when you're taking a look at the streaming service world, there are two things that are necessary to thrive. One is growth in user subscribers, and the second is original content. Take a look at video streaming, for example. In this space, you have two primary players, which are Netflix and Disney+. Now, if you look at Netflix has steadily grown its user base and their catalog of original programming to the point where even with Disney making a push, it won't take away from Netflix's competitive advantage, and they can comfortably coexist without any worry or any threats to their business because they have that user base built up and they are constantly putting out original programming to keep users engaged on your platform. Now, if you take it back to the audio streaming world and Spotify, you can see that Spotify is steadily increasing their monthly active users as well. And the only other threat, in my opinion, to Spotify right now is Apple Music. But what Spotify is doing as well is you can see that you're starting to build up your library of original content and exclusive content by buying up those shows and signing exclusive deals with platforms and shows like The Ringer, the Joe Rogan Experience, which are going to bring more users and give them more reason to be Spotify subscribers. Current forecasts from Spotify indicate a user growth of over 400 million users, as well as revenue growth to 2.5 billion euros over the next quarter. Now, I believe that this is very much attainable, especially with your push towards more ad revenue in your business model, as well as the forecasted user growth and the purchase of more original content. Based on this, I wouldn't be surprised to see the price of the company go past the $300 mark that it previously attained earlier this year. So is Spotify a buy? In my opinion, I think very much so. But then again, this is just my opinion. You gotta do your own research and don't consider this as investment advice. If you did like this video, please drop a like down below. It will be much appreciated and it really does help out the channel. Until next time, thanks for watching.